Hello, I'm Michelle Cole. I'm a baby boomer and I plan to retire someday. I've got some questions to ask and some ideas to share, so stay tuned. Thank you. If you are 62 or older and own your home, I have a few questions for you. Would you live in your home for the rest of your life if money wasn't an issue? What if you no longer had to think about leaving the home you love? What if you could travel to places you've only dreamed about? What if you could increase your cash flow so you'll be able to retire? What if you could relieve the stress of monthly mortgage payments? What if you could make sure that your money would last as long as you do? If you answered yes to any of these questions, then maybe a home equity conversion mortgage is your answer. Click on the Learn More button. You'll receive access to a short webinar and learn how a HECM could work for you. Thank you for joining my webinar, How to Make Sure Your Money Lasts as Long as You Do. As I mentioned a few moments ago, I specialize in these loans because of the financial peace of mind that it gave my mom a few years back. And this is she and I this summer at my oldest son's wedding. And I am a native San Diegan wife, mom, grandmother. I have over 24 years as a mortgage professional, and I'm employed with Golden Equity Mortgage, which is the reverse mortgage division of Land Home Financial Services, a mortgage banker, nationally known. We're licensed in 45 states. As with Golden Equity Mortgage, we're members of the National Reverse Mortgage Lenders Association, and I work directly under the supervision of a certified reverse mortgage professional. It's a real privilege because there's only a handful of these in the country, and it's great to be part of this organization. And it's always been important to me that nobody should be worried about running out of money, and especially when a HECM is often the right solution. So let's take a look at some facts, and I can answer your questions when you and I talk. What is a home equity conversion mortgage? Pronounced HECM. It's also known as a reverse mortgage. It's a loan that converts a portion of your equity into tax-free cash. The youngest homeowner must be at least 62. It's a federally insured loan by FHA. The loan amount is determined by the interest rate, the age of the youngest borrower, the appraised value of a home up to certain limits, and there are no monthly mortgage payments. It's a loan to fund your long life. Here's how it works. A HECM converts a percentage of your equity into cash for you to use now and or in the future. Equity is the difference between what your home is worth minus any current loan. Example 1, $500,000 valued home minus the $100,000 of your current loan balance leaves you $400,000 in equity. Example 2, that $500,000 valued home without any loan, the equity is the whole $500,000. A HECM loan must pay off the current loan, if any, and then allows the homeowner to use a portion of the remaining equity as cash. Disbursements of the cash equity are made in fixed or flexible amounts depending on the needs of the borrower and the terms of the HECM. So what are your retirement goals? With your current plan, will you be able to maintain your lifestyle, make home repairs or renovation to stay in the home for the rest of your life, check off your bucket list, do some fun things, provide for any health issues, fund a major purchase you might be thinking of, ensure that your money lasts as long as you do? Now here's some key points for HECM financing. There are no monthly mortgage payments required. You alone own your home. A HECM loan does not affect title or ownership. The eligible property: single-family homes, 2 to 4 units, approved condos, some manufactured homes. The loan must be repaid when you refinance or sell your home, you vacate your home for more than 12 months for medical or other reasons, the last borrower on the title passes away, you fail to pay property taxes or homeowners insurance, you do not maintain the home according to FHA requirements. So why should I use a HECM? To buy my next home? Because you're able to buy a better house than using all cash. You could utilize timing in the market. Buy now rather than later. Without mortgage payments, you'll have more cash available to enjoy your retirement. So let's take a look at the purchasing power. Imagine you've sold your home. You are 70 years old and received $143,000 cash proceeds to buy a home that better fits your lifestyle. Here's a couple of options for you to consider. $143,000 home or a $300,000 home. Now you could buy $143,000 home all cash, use all your proceeds, or you could buy the $300,000 home using those same proceeds plus a HECM for purchase loan. Now both of these options have no mortgage payments, but which would you prefer? Now here's another scenario, a changing lifestyle. Now here's a couple, they're retired, they have a good monthly income, they have a large family home that no longer fits their desire for a more stress-free lifestyle. Now this current home had no equity. In order to get out of it, they would not receive any equity out of the home, so they'd have to take the money out of their retirement savings, which was not going to be enough to buy even a smaller home with all cash. So the solution was the HECM for purchase loan, which allowed them to use a much smaller portion of their retirement funds, and they could buy the home that they really wanted. And now they're enjoying a few rounds of golf in a retirement community and living a stress-free lifestyle. Now how about nearing retirement? Here's a lady, she's a professional woman in her 60s. Her income dropped and she was rapidly depleting her savings. Now she sold her large home and she netted just over $600,000. She could only afford to take $300,000 of that towards her next home, and $300,000 had to go towards replenishing her retirement and savings account. Now the $300,000 would not buy the home she desired in her preferred location if she was paying all cash. So the solution was a HECM loan plus the $300,000 cash, which bought the downtown condo that she really wanted. And the other $300,000 is replenishing her accounts. So how can the HECM help fund my long life? Well, the line of credit is there when you need it. The credit line availability increases each year. This is very interesting. The credit line grows over the time. The older you get, the more that's available. So whatever portion of the credit line is not being used is growing, so it's there when you need it. It also can provide for in-home health care if that becomes necessary. Could take advantage of business opportunities, avoid withdrawing retirement funds at the wrong time. Could delay taking your Social Security, which would reduce the tax paid on benefits. It provides monthly cash flow, which can bridge the shortfall in covering any bills, and also for things that are important to you. It is your money, and you can spend it however you wish. It's there when you need it. So here's a couple that they would like to pay for their grandson's tuition. Both are retired, but their income just covers their bills. and they want to enjoy life more and do some things they've never done before. So the HECM provided money to pay their grandson's tuition and sufficient cash flow to take some really fun trips. In addition, their retirement income plus monthly cash payments from the HECM equity line means that their savings and investment accounts will last a lot longer. Timing the market. This single woman had a large home in Del Mar. She had substantial income, but she was concerned with the fact that she'd need to downsize in 2 or 3 years. She didn't want to sell when the market was down, and of course she didn't want to wait to buy when the market was inflated or considerably higher. So here's her current home, 3,400 square feet, large yard, pool, spa, and extremely high maintenance. So their solution was to take the proceeds from the HECM and buy her future home at a hugely discounted price. So she put some renters in there until the time is right for her to sell her Del Mar home and then make the transition to this one. The application process in 7 easy steps. The first part, where are you now? Let's take stock of your financial needs, goals, and circumstances and determine if a HECM is right for you. Attend a HUD-approved counseling. You'll participate in the HECM counseling session either in person or over the phone, and then receive a counseling certificate to give to your lender. The paperwork, well, you'll complete a HECM application with a licensed advisor. Finally, number 4, establish the home value. Will order an appraisal to determine what your home's worth. Then the loan processing and underwriting stage, you'll provide any additional paperwork that might be required. Number 6, at loan closing, you'll complete and sign loan documents to officially close your loan. Best part, receive the funds. You'll receive your HECM proceeds usually about 3 days. People from all walks of life have discovered that their HECM gives them the peace of mind that their money will last their lifetime. Find out for yourself if a HECM could be part of your financial plan to fund your long life. Make sure your money lasts as long as you do. I want to thank you for your time and watching my webinar today. And I know your situation is unique. I'm delighted to answer your questions. And I will provide you with a free loan quote. So, why don't you call now? 344-5998. Again, 858-344-5998. I'm Michelle Cole. I'm looking forward to talking with you. Have a great day. Call today, 858-344-5998. Thank you.